This is your brain when you're struggling to focus. And this is your brain when you're in the zone.
Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Leroy Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. That's right, your roadmap to financial freedom. Inside, we're going to be discussing things for absolute beginners who never even heard of the stock market or don't know what the stock market is. We're going to teach what is the stock market, what is a stock, what is an index. We're going to teach all of that. We're going to talk about options. We're going to talk about futures. We're going to talk about fundamental analysis, technical analysis. Speaking of technical analysis, we're going to take a deep dive into the ICT concepts. We're going to discuss how to figure out how much you need as an individual to save for your personal retirement. We're going to talk about retirement portfolios. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you. It's dropping on August 6, 2025, which is my birthday and my youngest son's birthday, for $69.99. Yes, $69.99 for all of this here. Mark the date, set it on your calendar, remember it, and I'll see you on August the 6th.
Good evening, everybody. How y'all doing? Hopefully everybody doing well. Let me stop that from playing in my ear. Y'all give me just one Chris, do me a favor. Hand me my phone right out there. I left my phone out there. It's sitting right here. In here. Yeah. All right. Thank you. Now, hold on one second. Give me un momento, please. Y'all come on in. Me and my mom went to go see Smurfs today. It was pretty good, man. We both enjoyed it.
Did pasta.
What's going on, man?
Smurfs was good.
Yeah, we enjoyed it, man. They ain't mad. Now the only I can't say the only thing I didn't like about it, Rihanna's voice too deep to be Smurfette.
Yeah.
That threw me off. I was like,
of course, it is a little deep though. She be sounding like what's our homegirl name?
Tiana Taylor.
Yeah, Tiana. Both of them voices a little deep.
They got them husky voices, like
jazz.
I say, man, yep, Jazz, Tiana Taylor, Rihanna, they got them. That's the only thing that was throwing me off. Everybody else, it was like cool, you know what I'm saying? Everybody had the right voice, and the person I thought was Gargamel wasn't Gargamel. That was Gargamel's brother.
Okay.
I remember I like Gargamel ain't skinny.
Slim.
Yeah, it was like who is this short fat dude? But that was Gargamel's brother. So, but they were showing him in the trailer. You know what I'm saying? Like everything I was seeing in the trailer, I'm like, wait a minute, man. But and then they didn't make it all crazy where the people was interacting with him. It was just a regular
Regular,
Smurfs
like the
thing, yeah.
cartoon.
Yeah, so when they was around the real people, the people didn't even see them. They, you know what I'm saying? They doing the little cartoon thing.
Yeah.
They sneaking around where people can
I,
see. Yeah, and like the animals can see it, like the dogs and stuff can see them, but the people can't. You know what I'm saying? So it stayed true to being like a cartoon Smurf. It was a nice little nostalgia. It was a nice little nostalgia. Me and mom, we had a good time. She was in there chuckling like a little kid. I said, girl, if you don't stop all that giggling. Yeah, man. It was, I was put them in doing so. It was good though. We enjoyed it, man. Let me see here. I hadn't got all sidetracked talking about the Smurfs. Yep. So good evening, everybody. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning, wait a minute. I forgot to put the Zoom link over here. I'm all over the place today, man. I jollipies, y'all. That's my bad. I bet little Timmy Rogers gonna make up a word now.
What you doing? Sharing the Zoom link in the YouTube page?
Yeah.
That's the members only YouTube or anybody
Public.
YouTube?
Yeah, public. Anybody
All
YouTube.
right.
All right. So now I got a link pinned to the top of the chat. It's for the Zoom. If you want to, you know what I'm saying, pull up in the Zoom and hang out with us. Like if you got like a question you want to ask, you want to unmute and ask a question, because y'all be typing slow and my reading don't be reading sometime. And then it's like a 4-second delay. So I'll be like, hello, are y'all there? You know what I'm saying? So I just peeked over at the chat and I saw LB say, can we get that Zoom link? Right. And it's 2025. So we all speak typo. So, you know what I'm saying? I even saw it with the typo and everything in there. And I was like, let me share the Zoom link. Anyway, good evening. If this is first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. Let me get myself in focus. Hold on. I still want to say welcome, but I want to give you a nice hearty, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., aka Aranya Grande. I know that sounds aggressive, but that just means Big Spider. I ain't got my lamp all the way in the scene. Come here, lamp. Y'all can see I'm all over the place today, man. Right?
Tim, you still a little fuzzy. It looked better when your hand was close to when you was adjusting it.
You say I'm fuzzy?
A little bit.
I think that might be your phone.
It had got clear, but then you took your hand away and it got fuzzy again.
It's showing that I'm focused. It's showing that I'm in focus.
Good, huh?
I think that might be your phone. Or
I'm on the desktop.
Your internet might be
I'm
that's
plugged
why.
in. I ain't even Wi-Fi. I'm plugged in.
You on that cheap desktop.
I'm a good gillionaire. I'm a good gillionaire, man.
Now see, Zoom only streaming like 720. Zoom don't give you like 1080p. It only stream in 720.
Hey, you know what? Your little picture up top is super clear, but the big picture, it ain't as clear as the small one up top.
Yeah. Zoom only give you 720. Zoom don't give you like 1080. So it ain't gonna be 8K. It ain't gonna be 4K on the Zoom. So you gotta deal with
it. Listen, you see what you talking about? 8K. No 4K, man. We ain't.
Hey, man, leave me alone, man. I'm supposed to be doing something right now. Who we got up in here, man? I just looked over there and I noticed I'm just moving my hand. I just saw the playback on what's that? Hey, Granny said I can't have no games, so I'm upset with it. Look, Trey Sean got in trouble in school. Now you can't leave school. Looking like Duke. Hey, man. I see we got Seawalk up in here.
What's going on, Tim? Gang?
What's going on? We got Lump. Everybody heard Lump. We got Jim up in here. We got Lamar up in here. What's going on, Lamar? We got Joe up in here.
Oh no.
What's happening? We got Here to Learn and Share up in here.
We got Valentine. Hola. Hola, Valentine. I ain't seen Valentine in the month of Sundays. We got Kim up in here. We got Thomas up in here. Michelle, what's up, Michelle? Michelle finally pulled up on us, man. I ain't seen Michelle in forever. Michelle, you been working. We got Miss V up in here. We got Yolanda up in here. Yolanda, don't be coming up in here with all that unmuting and cussing folk out in the background. She working from home today. Yolanda be coming up in here and she get a phone call and come back off mute and be yelling at the people in the background at the soccer field. What's going on, Venus? One time, I ain't gonna call no names, but one time somebody was at the soccer field and they was like, "Won't you just give me my mother?" Hey man, if Price did anything that caught you off guard today, you was expecting Price to do this and Price did that. Or you was thinking about this and Price did that, right? There's a link pinned to the top of the chat. Click on that link. It's a Zoom link. You can pull up. I got it set so that you ain't got to be worried about signing to the Zoom. Because people like, man, I be clicking on the link and try to make me sign into Zoom, try to make me do that. I got it set so you ain't got to worry about that. Pull up on the link, unmute, and be like, hey, Tim, help me understand this right here. I was expecting Price to do this, and it did that. All right? Now, with that being said, let's go on over here and look at the chicka charts and look at today's price action. Right? Did I say that this is the intraday price action recap? If I didn't, this is the intraday price action recap. As you saw in the beginning, if you saw the promo in the beginning, it's being brought to you by the Smart Money Manuscript. Smart Money Manuscript is a online course that I'm putting together, and it's dealing with everything from A to Z, right? From an absolute beginner, never heard of the stock market, all the way through having the ability to read price and day trade if you want to. Everything in between, right? It's all gonna be inside there. It has lectures, it has quizzes, it has slides that you can download. You can download the slides, and it's through WAP. So this is how it looks right here, right? This is how it looks right here. You see, we got phase 1, budgeting, budgeting quiz, banking quiz, how to start. In phase 2, this is like the basics up here. I'm not finished building it out, but phase 1 is like the basics, right? I'm not finished with phase 1. I'm not finished with phase 2 yet. Phase 2 is when we get into the meat and potatoes. Some of the gang had opportunity to go through and take some quizzes during phase 2, right? They had a chance to go through and take some quizzes. Like you got the lecture, right? Inside there it says lecture, then it say how to start quiz, right? And if you go through and you take the quiz, you answer the questions. So far, each quiz got like 5 questions. I think I'm going to stick with that 5 questions, but we'll see, right? You take the quiz and then you have to get, it doesn't show you there, but you got to get at least a 75, right? You got to get at least a 75 to pass the quiz, and you can't skip. Like, you can't come in here and just jump down to introduction to futures, right? Because if you do that, I already did all of this right here with the gang, but we already did all that with the gang. So, we already went through this. So wait a minute, let me see. Yes, we already went through this right here. The fundamentals. Did we go through the fundamentals? Yeah. We already went through. Yeah, we went through. I think we went through this stuff here. Let me see here. Yeah, we went through hold on for a second. Because I've been going in and changing stuff. So Okay, yes. Lesson must be completed. Yes, lesson must be completed. Yes. So I've been going through a lot of stuff. So it's I can click on it. Yeah, I've been going through a lot of stuff, so I can click on live, but you can't skip. Gang saw it. It won't let you skip. Like when it's, you know what I'm saying, when you if you haven't done it, it says please go to, and it points you back to the lesson that you got to complete before going through. Right, you got to complete before going through. But since I done went through, I've been going through it, trying to troubleshoot it and stuff like that. Oh, and then inside of the that's the quiz. And inside it right there, you see it's got how to start. Those are the slides, right? You can go in and download the slides right there. Right. Those are the slides. So that's the Smart Money manuscript. Now, let's get into it. Let's get into it. What's up, Sonia? What's up, light skinned Deborah? You done pulled up in here. Let's get it. I don't see nothing in the chat. Ain't nobody unmute. What's going on, Felicia? Ain't nobody unmute. I don't see nothing in the chat. Ain't nobody pull up in the Zoom and say, hey, Tim, help me out. So we gonna go ahead and get started. This right here is the start of the week. So let's zoom. Well, before we zoom out, right? We got it on 15-minute candles. And as we talked about yesterday, right? Whenever, right? Class participation time. Go ahead, y'all just go ahead and unmute right now. Whenever this is the start of the new week right here, right? At the end of this purple rectangle, right? It's the start of the new week. Whenever we go into the new week, the new session, the new day, the new hour, the new anything, right? What are we paying attention to? Go. Somebody unmute and tell me. No, that's what we're anticipating, Valentine. See, you're trying to type fast. Let me finish the question. What are we paying attention to? I didn't say what we are anticipating. I said, what are we paying attention to? And I even gave you clues, Valentine.
Weekly high and low.
The liquidity. Look at Valentine. Somebody get Valentine off my live. Somebody get Valentine off my Valentine just out here. Valentine is Empire Traders typing for you, Valentine. Valentine out there swinging and missing. Swinging and missing. Manipulation. First fair value gap. Dennis Rodman got a coach. Valentine just swinging. Boy, Valentine out here looking like Empire Traders today. Hey, we're looking at the liquidity from the prior week, from the prior session, from the prior day, from the prior hour, from the prior anything algorithmic. When you come into a new one, you're looking at the liquidity, right? And you're anticipating manipulation, right? You're anticipating manipulation. So if we were coming into this week here and you were bearish coming into this week, one person, hold on. I wish I can show y'all. All right. Y'all do me a favor. On a scratch piece of paper, 1, 2, 3, 4, 5, 6, 7, 8, 9. On a scratch piece of paper, write this number down when I call your name. Seawalk, 1. Lump, 2. Jim, 3. Lamar, 4. Joe, 5. Miss V, 6. Yolanda on there twice. Yolanda, 7. Light-skinned Deborah, 8. Y'all write them numbers down. Right? You're not getting more. What? Shout out. All right. If you come, get over here. If you come into this week, why didn't it move the whole thing? Come on, thing, act right now. Okay, it's not acting right. We'll just do it manually. If you come into this week and you're bearish, I'm not saying you're bearish, but if you come into this week and you're bearish, what do you, don't everybody scream out because I'm gonna pick a number. What do you look for? What do you anticipate? And what do you want to happen? 3, Jim, that's you. What do you look for? What do you anticipate? And what do you want to see happen? If you come into this week and you're bearish.
If I'm bearish, I would like it to go up and take some liquidity first.
Okay.
And then go down.
Okay. That's what you look for, and that's what you want. And I mean, yeah. I mean, that's what you anticipate and want. And what are you looking at? What are you looking for? Going into the week, what are you looking at? You already did what you anticipate and what you want.
What am I looking for? Well, I see that it took the liquidity that was to the left.
Now, don't worry. When you start the week, yeah, we start in the week right here. So when we start, we just said it. When we start the new week, you're looking at
highs and lows.
The prior week highs and lows. Y'all give it up for Jim on the 1972 speakerphone. Y'all give it up for Jim. Good job. So going into,
well, I'm in my car right now too.
Oh, slight flex. Okay, slight flex. Yeah, I'm in my drop top right now. You know what I'm saying? I'm in the Phantom. I'm in the Cullinan looking at the stars. You hear me? So going into a new anything, right? And we're just gonna say session, right? Going into the new session, because this week is a start of a new weekly session. We're paying attention to the highest high and lowest low. Why? Because liquidity rests there. Right? Liquidity rests there. We're paying attention to those because that's where the liquidity is. If you are bearish, right? And then we anticipate manipulation, right? We anticipate manipulation. Jim covered that in, you know what I'm saying, his way of saying, I want to see it go up and take out some buy side first before going down, right? That's a less technical the way to say I'm anticipating manipulation, right? That's more direct. I like to say I'm anticipating manipulation because I'm not a bull or a bear. I'm a beast. So it's like whatever the market shows me, I may come in being bearish, but then the market shows me that I'm wrong and it's bullish, right? Or I might come in being bullish and the market shows me that I'm wrong and it's bearish. So I just anticipate manipulation. And then once I identify that manipulation, then I start to trade accordingly. Now, going into the new anything, look at where the liquidity lies, anticipate manipulation. Now, if you have a bias, right, you want to see it engage the opposing liquidity, right? So if you're bearish, you want to see it engage the buy side first, right? The buy side of the prior whatever, the prior week, the prior day, the prior session, the prior hour. Why? Because that's the algorithmic dealing range that you're trading within, right? So you want to see it take out that liquidity, engage that liquidity, and you want to see it presented as I'm manipulating the dumb money, right? I'm manipulating the dumb money. Then you'd be like, aha, the manipulation is going in the direction that I wanted to see it go. I'm on the right side of things, right? Well, Tim, how do you validate if it's manipulation and you're on the right side of things? Because the algorithm will leave you clues, right? So that's what you look for, that's what you anticipate, and that's what you want to happen. You look for the liquidity, you anticipate the manipulation, and you want it to manipulate the opposing liquidity from the draw, right? So coming into the new week, right? We came into the new week and the algorithm, right? We were in a buy program, right? We're in a buy program. And as we approaching the week, right here, we come up, we set the high of last week, and then we pull back into the discount. We talked about this yesterday, right? We pull back into the discount. And then once we pull back into the discount, we set up a new bullish dealing range. And then we use that new dealing range to go up and engage the buy side, right? Engage the buy side. Now, from Tim, you just said if you start the week off bearish, and now you talk about we was in a buy program, because we're in a buy program. I was just using that as an example, right? So we're in a buy program. So in the buy program, you're looking for the market to continuously expand the bullish dealing range. Okay. Now you see here, as we come into the new week, right? We said we went up and we engaged the buy side, right? Once we engaged the buy side, we set up relative equal highs, engineered some buy side liquidity up here, okay? And then we came down here, got an inversion fair value gap right there, right? Came down, got an inversion fair value gap right here. And then as we started the new day, we started today, right? We started today. As we start today, we traded up into that inversion fair value gap, right? Traded up into the new traded up into the inversion fair value gap. We traded down here. So now we have relative equal lows running up under all of this accumulation right there, right? We got a low down here that we haven't taken out yet, starting the new day, right? So we got sell side liquidity from a prior session sitting here, right? And we got all of these relative equal lows from the start of this day. Okay, so we got relative equal lows. We trade up into the inversion fair value gap, right? We come back down, set relative equal lows, and then we trade up into the inversion fair value gap one more time, taking out buy side liquidity, and then we instantly reverse, right, and take out all of this sell side liquidity over here, trading down into this busy right there. Okay. Now we've come up here, set a high, relative equal highs, breaking down, and now the algorithm is showing you that it's in a sell program. Why? Because it's respecting premium PD arrays, right? Respecting premium PD arrays, and it's pushing through discount PD arrays, respecting bearish PD arrays, and pushing through bullish PD arrays, right? So it's showing you we're in a sell program right now. Why? It's not pushing through the highs, it's pushing through the lows, right? All of that, all the different reasons why you can identify a sell program, it's there. Now you see, as we come into the day, right, we see we got verification that the algorithm is in a sell program, right? We got verification that the algorithm is in a sell program. As we start the new day per the algorithm at 12 midnight. This the start. It's the true day open. 12 midnight as we start the new day, right? The algorithm, we trade down, push back up into that, that SIBI, into that bearish order block. I know y'all saying, Tim, that his screen is so small. That don't matter. We're just looking at the order flow, right? We trade down, we push back up into the new day opening gap, into what is this over here? That's a balanced price range, into the balanced price range, right? And we trade down, taking out the sell side liquidity again, right? And we trade all the way back down to that inversion fair value gap right there, right? Boop. That's a key. That right there is a key inversion fair value gap right there. All right. That inversion fair value gap right there is a key inversion fair value gap right there. Okay. Why is that a key inversion fair value gap? All right. Because that is the first imbalance created when the market displaced away, taking out this sell side liquidity at our anticipatory reactionary point before rallying away, right? It rallied away. That's the first imbalance there. And price came down to it there, boop, rested on it for a little while, and then we traded all the way back up, right? And if we look right here, this candle right here, mark this out. At this candle right here, something happened. What happened right here? Two very important individuals, if you want to give them a personality. Two very important people met. Can somebody tell me who met right here on this candle right here? Let me get my generator. Two, lump. What two very important people met on this candle right here? See this candle right here?
Mhm.
Two very important things met, but we want to call them people right there.
Things and people.
Yeah. You see what that
Oh,
says
just
right
your
there?
terms.
Yeah, you see what that
That's
says
the
right
mark.
there?
That's the New York Open right there.
Okay. And you see this right here?
The London High.
Okay, what happened right here?
They respected that new day opening. Oh, you
Something
what happened at
happened.
9:30?
Yes. What is
Market
9:30?
open.
What is 9:30? What is 9:30 a.m.?
That's when the market opened.
Yeah, not just when the market opened, but what is it? What is 9:30 a.m.? What is 5 o'clock? What is 2:30? What is
The
9:30?
beginning of something,
No,
something
what is
new.
no,
The
what
start of
is
something new.
what's 7 o'clock in the morning? What's 9 o'clock at night? What is that right there? It's what? 9:30
Time.
time. Yes. So what happened on this red candle right there? Two very important things met on
Price
this.
and time.
Time met price. Time and price aligned at this very important time right there, right? And you said that we were coming into a new
Session.
a new session. So Seawalk, coming into this new session. Yeah. Coming into this new session, tell us what you were anticipating based off the fact that what do we say? What do we say the algorithm has showed us right around this time here? That it was in what? Seawalk.
What a cell program?
Down a
I
cell
said
program.
Seawalk.
Oh,
Cell program.
It said it was in a cell program, right? So if the algorithm is saying it's in a cell program and we're going into a new session, right? What should the algorithm do going into a new set? You're coming into the New York session. So what liquidity are you looking to get swept, and what liquidity do you want to get swept first?
Opposite direction of where I want to go.
Man, see, walk your name change. I mean, your voice
Oh, I'm
changed.
sorry. I'm sorry.
Drastically. Golly.
I want to see
Sorry,
it.
Seawalk. Sorry, man. I keep my
Take the
mouth
London
shut.
high.
Say that again, Seawalk.
I want to see it manipulate and go up and take the London high.
Very good. You want to see it manipulate and take out the London high, right?
Mm.
We already had Jim. Wait a minute. Yeah, somebody came in. Something off now. Marco, you need a number. Marco, you 9. You not write 9 on a piece of paper, Marco. All right.
But I just took Seawalk's
just write
question by accident, man. I'm sorry about that.
Put 9 on a piece of paper. Write down 9. 6.
Okay.
Who's that? Miss V? My thing moved because somebody came in. 1, 2, 3, 4, 5, 6. Yeah, Miss V should be 6. Am I right? Miss V 6, right? Miss V trying to play like she can't talk now. Ain't this about a tear? All right, so what was I saying? We came into a new session. We want to see it manipulate the London high. What was I about to say? I can't remember where I was going with that. Okay, I'll just make something up. Right. Seawalk is right because we want to see it manipulate, and what we want to see it manipulate the London high. All right. Number 6, Miss V. Why is the London high the liquidity that we're watching right now? And why is the London high and the London low the liquidity that we're watching at the 9:30 open? Why? And it's not just because it's the previous session. I give you a hint. It's not just because it's the previous session, right? Previous session has something to do with it, but it's not just because it's the previous session. There's something far more important than it's just the previous session. Miss V. Ouch. They go one of my feelings just got hurt. One of my feelings just got hurt. Marco, why are we watching going into the new session? Why is the London high and low the liquidity we're watching? And it's not only because it's the previous session. There's something.
It's the last stealing range that took out the low.
No. Right. Because we said going into a new anything, we're watching the previous sessions high and low. That's where we're looking, right? And I said, going into this, Yes, you're right. We're watching the London high and low, and we want to see it manipulate out the London high, but the London high and low at this particular time, why are we watching this high and this low at this time? It is not only because it's the prior session, it's something far
That's where
more.
the liquidity's at.
I mean, that's why we're watching it, because that's where the liquidity at. But why? What about when this candle opens right here? Right. I'll make it big for you. Hopefully you can get it. Right. Just look at the chart. Right. Right. Here we are right here at 9:30 when we open. There's the London high. There's the London low. Right. Okay. There's liquidity resting here. There's liquidity resting there. Right. There's liquidity resting there. Right. Why are we watching that high? Right. Instead of that high, instead of that high. Right. Yeah. This is the previous session. True. But why at this time here, why are we watching that high and that low? You want to phone a friend, Marco?
Yeah, no. The only thing, my last answer is because that's the last high that took out the low.
Okay, that's the last high that took out the low. All right. Nope, that ain't it.
Okay, so I'm out of answers.
You want to phone a friend?
Sure.
6, Miss V playing with us. Miss V acting like she can't unmute. Let me see. Marco again. 5. That's Joe. Joe.
Yeah, that's me, Tim. But I don't think I'm lying, man. But I can't see I can't see my screen on my phone. I can see all the faces, but I can't see the chart.
Swipe to the right. Like swipe to the right or left, whichever way you got to go. Swipe one of the ways. Swipe, because you looking at everybody, but like swipe to the, like if you keep swiping to the right, you'll get to a point that say press
All
the
right,
talk.
here we go.
But
All right,
yeah,
here we go. Here we go.
all right.
Here we go.
So
all right, what's your question?
So this is the start of the 9:30. We're coming into a new session, right? That's London high, that's London low, right? This is the prior session's liquidity pools, right? The previous session liquidity pools. I said coming into 9:30 at this time, price is here. I said, why is the London high and London low the liquidity pools that we're watching? And it's not only because it's the previous session. There's something else that's far more important than it being the previous session that's happening right here at this time. Right there. Okay, let me do it like this to kind of help you get like a visual of it. We're gonna take that 9:30 off. Boom. Now look at it.
Because it just completed looks like it just completed.
No. Y'all thinking too deep. Y'all thinking, everybody think, don't try to go deep. When you look at the screen, all right? When you look at the screen, right? Prices.
Because you got relatively equal highs.
Thinking too deep. Right?
Hey Tim, is it because that's our dealing range? That's the price leg we in right now?
Okay, it's in the price that's no, it ain't the dealing range, right? This is the dealing range, we know that. But what do we say? What does Michael say about his PD raise?
Market high.
What does Michael say about his PD raise? He said his PD raise never do what?
Never go stale.
They never go stale. And right, since his PD raise never go stale, when do we look for a reaction off them PD raise? When price does what?
When it
what
goes
we just
to
talked about
ARP.
when I say when price meets time?
When price meets time, but when price meets time, but price, okay. Let me do it like this.
I see a new day opening gap.
You're thinking too deep. You're thinking too deep. Price right here. Why we ain't looking at this high right there? Why we ain't focused on that high to get swept?
Because it's already a protected high. We in a
Thinking
sale
too deep.
program.
You're thinking too deep. Price right here. Why we ain't looking at this low right here?
It's the closest high to the
It's
price
the
action.
closest liquidity to where price is. Price is inside, in between those liquidity points, right? This is the closest time-based liquidity to where price is right now. So we're saying, okay, this is the closest time-based liquidity. That's very important. I want to see how price reacts off of this. So if this was just a random high, right, we would be looking for how price reacted off that. And if this was the London high, right, if this was the London high here, let's do this right here. If this was the London high, right, and this was just some random high, right, we would look for how price reacts to this, right? But we would want to see price give us the sweep off of the previous session. You see what I'm saying? Because this right here is a previous session liquidity. So this right here is a higher time frame liquidity than just a random swing high that's inside this dealing range. You see what I'm saying? Mute for me, Joe. Inside another dealing range. So price is trading near these prices. This is a mute for me. Yeah, I think it's something too, but let me go ahead and mute. Right? So price is trading near these liquidity pools. So anytime price comes near a time-based liquidity pool, right? Remember when I said we came down here, I said that's a very important PD array right there, right? I said that's a very important PD array. What made it an important PD array? Because this was the first SIBI that was created when price swept liquidity at our anticipatory reactionary point, right? When price swept liquidity at our anticipatory reactionary point. And then when we see here, we actually didn't even get to it, but where did price come down to? Right here to this bullish breaker right there, traded almost to the inversion fair value gap, but close enough for government work. In this case, it didn't make it to it. If you was waiting there, you wouldn't have got picked up. So bad, so sad, right? But price came down to this very important place, right? And then it got a reaction off of it, right? Was it meant to send price all the way back up? No, it wasn't. As we see that we're in a sale program and the sale program stayed intact, right? But the algorithm is going to refer back to important PD arrays when time meets price, right? No matter if they got the cut through candles or not, Ant-Man can see through the candles. So now when you're looking for time-based liquidity, right, your first area of attention is the previous session's high and low. Why? Because that's your higher time frame liquidity pool, right? Previous session going to a new session, previous session, that's a higher time frame. Above previous session, previous day. Above previous day, previous week. Above previous month, previous week, previous month, right? So it's like we're looking back to the previous session's high. And in this case, since we're below the previous session high and above the previous session low, this is the high that we want to see price manipulate. Why? Because we're in a sale program and we want to see it manipulate the higher time frame high and then give us a reason to sell back toward the opposite end of that previous session's range and any higher time frame liquidity outside of that. All right. Make sense to everybody? Everybody tracking? Did I lose anybody? Did I lose anybody? All right. And this right here is the crux of the matter, right? This is what I mean when I say forget about all of the PD arrays and understand order flow and price delivery first. If you understand order flow and price delivery first, then you understand how to put together this PD array matrix, right? You understand how to put together this PD array matrix, right? Because little Timmy Rogers, when I first looked at his PD array matrix and Michael was teaching about it, right? I was looking to use everything on this PD array matrix. I was trying to use everything. I wanted it to be a breaker combined with a fair value gap, combined with a order block, combined with a this, combined. I was trying to use everything, right? But when you understand order flow and price delivery, you realize that this is the high of your range up here above this red line. This is the low of your range down here below this blue line, right? And this is equilibrium or fair value of your range right here on this gray line, right? And what is this range? This is your dealing range, right? This is your dealing range high. Let me turn on my fancy dancy. This is your dealing range high. This is your dealing range low, right? And when you create a dealing range, what's going to be all the way at the high? It's going to be a swing high that took out some kind of buy side liquidity. Oh, high. What's going to be at the low? It's going to be a swing low that took out some liquidity. Oh, low, right? If you get a long wick with relative equal bodies, right? What is that? That's a rejection block. Where does that rejection block rest at? From the highest wick to the highest close, from the lowest wick to the lowest close, right? That's where your rejection block will reside if it's there, right? It's always going to be a low and a high present in the dealing range. But if the rejection block is there, it's going to be right after that higher low, right? When we get our change in the state delivery, what are we doing? We're trading back up above down close candles when we went the last continuous down close candles. When we trade back above them, that gives us our order block. What is that going to be sitting on top of? Either a low or a rejection block if it's there, right? Either a high, it's going to be sitting below a high, or a rejection block if it's there, right? When we get our displacement and validate this order block if it's present, right? How do we get that validation? With a fair value gap, right? And at the time when he was teaching liquidity voids, what is a liquidity void? A bunch of fair value gaps in bunch of consecutive fair value gaps, right? Back to back to back to back to back. So a buy side or a sell side imbalance. When you look at this PD array matrix, just think about a buy side imbalance or sell side imbalance, because that's really what liquidity void is on these old slides, right? But it could be a liquidity void because it could just gap open and don't have no trading in between because the algorithm moving so fast. So you can go straight from the order block to another candle with no trading in between. That's still a gap, right? But in this case, just think of a buy side or a sell side imbalance, right? And then when you get that break in market structure, what is going to be there? A breaker. A breaker is going to be at that high or that low that you just traded past. And if you had a failure swing back there, when you drop down, after you swept some liquidity and you retrace back down into that rejection block and you displace back up, then if you had a failure swing back there, guess what's going to be there instead of a breaker? A mitigation block, right? a mitigation block is going to be there if it exists. Okay. So when you're looking at price, you're not really worried about what PD arrays are there until the algorithm gives you a reason to start trying to trade. Right. Once it gives you a reason to start trying to trade, then and only then do you start looking at the PD arrays that you want to participate in. Right. But Tim, when do I start looking? It determines on what's your criteria of validation, right? Are you a turtle soup trader? Right? If you trade turtle soup, right? If you trade turtle soup, when we come into this session and you're in a sale program, right? Soon as you come into this session, when you trade above that higher time frame liquidity pool, you're entering right there. Soon as you trade above that right there. Tim, where do I put my stop? I don't trade turtle soup, right? So I can't say this is where you put your stop, right? It's up to you, your risk tolerance. But if you want to trade it based off of what the algorithm has presented you, right? You would want to use some type of PD array. You don't expect price to trade back beyond, right? And in this case right here, looking at this high, if you got short above that right there, right, you're going to look to the left above this high to see what's over here that price should not trade back to, right? So we look over here, right? We look over here as we coming down. As we come down here, price coming down here to here. This is all we need to look at in this area here. All right, this little piece right here. Right, looking in this little piece of price action here. Right, somebody give me something that price should respect, and you want to put your stop loss above, right? Just off glancing at it, I can see 3 PD arrays. Just glancing at it, I can see 3 PD arrays that jump out at me, right? Number 4, Lamar. Give me a PD array.
Yeah.
Over here. If you got in on turtle soup, give me a PD array over here that you can use to put your stop above, because price should not come back to it. And then the next person, well, no, I want you to explain why. Give me a PD array and then explain why price should not come back to it over here in that section of price that I.
So you got that SIBI fair value gap and you got that old high that you can use.
Okay, SIBI fair value gap. With SIBI here.
Yeah, right there.
Okay, that SIBI right there. Right. So price should respect that. Right. And tell me why.
Oh, well, it should stand as resistance.
Yeah. We don't use words like it's just standard resistance. Tell me algorithmically why that's it. You picked out the right thing now. That's the first thing that my eyes were drawn to. Now the safe would be here. That's the safe one.
Yeah, I was gonna say that as a second one.
Yeah, this is the safe one. This right here is safe. Price should not go there, because we're in a sale program and you don't want to reverse outside of the sale program. That's the safe one. But this right here, that is laser sharp precision right there. Why is that? If you want to phone a friend, just say, I want to phone a friend.
Let me phone a friend for this one.
Jim. He phoned a friend. But matter of fact, and anybody who think they know, right?
It's the first fair value gap.
You better tell them, Seawalk. You better tell them, Seawalk. This is the first SIBI created when price. This is our change in the state of delivery. Remember, we came here, we swept out liquidity, then we came there and swept out liquidity there. This was our change in the state of delivery. That's the first SIBI that was created in our change in the state of delivery run. That's the SIBI you want to see price inside this bearish breaker over here, right? Inside this bearish break over here, that stopping price right there. If price is going to trade back up inside there, right? You want to see it coming back to some type of first fair value gap, right? And so when you're coming up here, this is your first BSI inside this bearish breaker, right? And on the other side, this is our first SIBI coming down, right? So since we're bearish, right, and we're trading back up to it, now this is when it's okay to use resistance, right? When you're coming back up to resistance, what fair value gap do you want to see it go to? That first one, right? You want to see it go to that first one. And where did it go? That first fair value gap and that displacement right there, right? So if you want to see it respect this right here, right, you can put your stop above that. Why? Because you're anticipating price to respect this. If you want to see price respect this, because you say this is the first BSI that was created in our change in the state delivery. This is the we displaced the weight, taken out buy side. This is the manipulation leg, right? And we came back down. We're looking for this to be an inversion fair value gap. We used it right there on the way down. So when we're trading back up, right, you can anticipate price coming to that first high probability inversion fair value gap. So you say, okay, if I'm going to allow for price to come back up there, I can put my stop above that fair value gap. Now, the safe place to go is the swing high, right? And then you can also use mean threshold, right, of the order block, right? Mean threshold of the order block resides right there with the SIBI, right? These are all, you always want to use you want to put your stop in a place that the algorithm should not return to. You don't want to limit yourself to a fixed stop. Excuse me, I'm sorry, y'all. If you can't afford to put it where the algorithm won't return to, don't take the trade. That's not your trade, right? Either size down or don't take the trade. If you sized as low as you can go, don't take the trade. All right. So if you trade turtle soup, right, you're looking to enter as soon as you hit that right there, right? Now, if you don't trade turtle soup, okay, if you don't trade turtle soup, when price on, this is the 15-minute time frame we're looking at right here, when we engage, right, the buy side liquidity, right? We've engaged the buy side liquidity. So now on this 15-minute time frame, right, price coming all the way down here, and you get a break in market structure there, right? If you wait for your 15-minute time frame to give you something, in this case right here, right? In this case right here, if you're waiting for this 15-minute candle to close to give you some type of confirmation of something, or if you want it to just touch this low, right? At this time here, once this candle either touched that low or this candle closed, at this time here is when you would drop to your lower time frame to start looking for an entry, right? If you just want to see your 15-minute engage the liquidity, right? And then from there, you're starting to watch your lower time frame for some type of signature. As soon as we trade up there and hit that, then you're in your entry time frame. Let me take some of this off so that we ain't trying to just leave them 2 candles there. Now you're in your entry time frame now, and you're looking for a reason to sell. All right. So we come here, we trade above the liquidity. Turtle soup people, you went short already. We already talked about stop placement, right? We went above the liquidity, and then this 1 minute candle drops down, right? Now we got us a breaking market structure right there. We got a bearish breaking market structure. All right. Now, still, for me personally, still nothing to trade, right? Still nothing to trade. But if you're in the mindset of inversion fair value gaps and you enter as soon as they're created, as soon as this candle closes, you just created an inversion fair value gap right there, right? It's a big candle, but you just created an inversion fair value gap right there. So when this candle closes, right, that would be your entry if you're in the mind, because I see plenty of people I know, I ain't gonna say no, but I see plenty of traders that as soon as the inversion fair value gap is created, they mark it in as soon as this candle open, right? That's their entry, right? And they're looking at a stop above the inversion fair value gap or above the high. Okay, you're always putting it where you don't anticipate the algorithm to revisit. All right. Now this candle drops down here, creates a bearish fair value gap. All right. This candle here drops down, creates a bearish fair value gap. This next candle here, right, proceeds down and creates another bearish fair value gap. So now you got a bearish fair value gap immediately followed by a bearish fair value gap. Lump, what does that mean about that fair value gap right there? Got a bearish fair value gap immediately followed by another bearish fair value gap. That makes this what?
Not sure. Oh, propose? No. Nah, I don't know what that is.
Can I help him?
Yeah, go
Yes.
ahead. What is it?
I anticipate that being a breakaway gap. I
A
don't
breakaway
know
gap.
Yeah.
That's a breakaway gap, right? Now, it's a breakaway gap. You created a breakaway gap here. When you create a breakaway gap, you don't anticipate price going back there, right? So now, not only do you have a breakaway gap here, okay, what's going on here? What's this right here? What's happening right here?
A bunch of consolidation.
And that consolidation means what?
They generating liquidity.
Not generating liquidity in this case, but what does that mean? It's what?
Efficiently.
It's efficiently delivered.
Right?
It's efficiently delivered. So when we do this here, right, that move right there, what does that move right there mean about that area there? We done went to gym 40 times. Joe, we done went to Joe a lot of.
They probably just leaving that because that price range is balanced.
What does that mean about, what does this move right here tell us about this efficiently delivered area right there? That is what?
Price probably won't be coming back up there.
And why won't it be coming back up there? Because it's what? What does that move tell us? We said that this is efficiently delivered because it's got buy side and sell side delivery all through here. And then that move right there tells us that this is what now?
Gotcha.
Can you see your screen?
I can see it. I'm looking at it. BPR. Yeah, I don't know what that is.
You don't know what BPR is?
No, sir. What's that?
Uh-oh.
Oh, balanced price range.
Yes, a balanced price range, right? So what a balanced price is, several ways to get a balanced price range. One of the ways is when the algorithm offers buy side and sell side liquidity within a range. When the algorithm leaves that area, displaces away from that area, this displacement lets you know that that's a balanced price range, right?
Got it.
The buy side and sell side delivery just means that that's efficiently delivered. But when the algorithm displaces away, that displacement lets you know that it's a balanced price range. It's leaving because it's done with that. That's all balanced out. All right.
Got it.
So now when we see, right, when we see, right, an area like this, right? Yeah, what's happening? When we see an area like this right here, and we look up here, and we look up here, and this top, God dog it, this top half up here, and we see it's efficiently delivered, right? What we're focusing on is the area that left that balanced price range, right? We're looking at the area that left that balanced price range, okay? And not only are we looking at the area that left that balanced price range, right? We're looking to the left to look for any type of confluence that lets us know that it's safe to sell in the premium of this range. So from this low to that high, right? Because at the time when price is dropping, this is what price looks like. Right? That's what price looks like. At the time when price is dropping, this is what price looks like. Okay. So now you want to get short, but where do we sell? Anybody can answer. Where do we sell?
And I'm premium.
Selling a premium.
In a premium, right? So we're looking, this is our range here, right? And we see the top of this range. This is our dealing range here. We see the high end of our dealing range is efficiently delivered, and we left it. So now this is a balanced price range. So we are looking from when we left that balanced price range to the low, right? Above this right here is the premium, right? So anything above, we're just gonna say 23,302, right? We just pick, matter of fact, let me switch this so I can get an exact number. Right, 23,302 and a quarter, right? Anything above 23,302 and a quarter is a premium, right? So inside the premium of our range, right, we got a SIBI right here. Now we saying, okay, this is a balanced price range. Price should not come back up there. I want to participate in this short. Here is my premium PDA rate. I'm looking for a reason to sell in the premium, anything above 23,302 and a quarter, right? So now I'm looking to the left to see if there's any confluence that lets me know that it's okay for me to trade off of this because I have gap risk above me. There is a breakaway gap above me. I'm anticipating price not to go back up there, but I'm looking to the left for algorithmic confirmation that it's okay to sell on this SIBI that's in the premium. Now, somebody, number one, Seawalk, what's over there that tells us it's okay to sell in this SIBI right there? What's over there and why?
I see a fair value gap, inversion fair value gap.
Here?
Let me see. Hold on a second.
Here,
the 745 candle, 742 candle.
742 candle. Very good. And why that inversion fair value gap? What is important about it? What is unique about it?
It's the first for fair value gap that took out a high.
That's that first fair value gap on our displacement for this bullish change in the state of delivery right here. Right? We had our change of state of delivery. We raced up, took out this buy side liquidity right here at a specific place, an algorithmic place and time. We created a bullish fair value gap right there. Now that we've come back down, right, this is the very first one that we took out that, and it's also the very first one from this entire run up, right? From here to there, that's the very first one, right? So that right there is giving you confluence that it's okay to sell here. Now, mind you, with manipulation, you still have to worry about this, but now that is your confirmation that, hey, I should be good to sell there. And then you manage your risk right there. You know what I'm saying? Your mandatory stop, like we say, above the candle of the fair value gap, and your safe stop is above the high, right? You manage your risk in accordance to what your risk tolerance is and based off of PD arrays, mandatory, safe, right? Above the inversion fair value gap, that's aggressive, but that's a thing, right? It's supposed to respect this. We shouldn't go above it. So you go a few ticks above that right there, just in case you get froggy and want to poke above it, right? That's aggressive, but it's because of a PD rate. So you're using algorithmic principle behind placing your stop, right? And then when we put the meat back on the bone, right, we see that price trades back up, right? And you see that right there? You know, I said about if you want to wick above, right? It wicked above the inversion fair value gap. That right there should be green. That's driving me crazy because it should be green. Right? It wicked above the inversion fair value gap, but look at the bodies. Look at what the bodies are doing. The bodies are respecting consequent encroachment of the inversion, respecting consequent encroachment of the SIBI, right? Because this is what we're selling off of. We're selling off of the SIBI, but the signature that lets you know that the algorithm wants to sell here is that inversion fair value gap that it created for a very specific reason. And that's to get short off of when price trades back to it at the right time, right? Right there. Look at the bodies telling the story. And then we wick above it. And then we see there, right, where we wicked above it, if we come in here and put this into quads, right? Where do we go? Right up there to that upper quadrant, right there. We traded up to the upper quadrant, right? And then, if I'm not mistaken, we went right up to just into a slight premium of the overall range, right there, just into a slight premium of the overall range there before dropping like it was hot. Now, if that right there isn't enough for you right there, right? You say, Tim, I don't like selling the low risk shorts, right? Because this would be your low risk short in the sense of a market maker sell model, right? In the sense of a market maker sell model, because you want to think about things as the market makers, right? So it may not be a pretty spelled out market maker sell model that you see all of the different phases, but what are we doing? We're looking at it accumulating, manipulating, and distributing, right? Distributing, right? So if you're looking at it in the sense of a market maker sell model, you say, okay, this is my smart money reversal. This is my low risk short, right? You say, Tim, I don't trust going in a low risk short. I'm not comfortable with that. No problem, no harm, no foul, right? When you get your smart money reversal, we come back up here, we're looking for it to give some type of support. When you trade back down below this low right there, trading down below that low confirms that that's your smart money reversal.
confirms that this is your low risk short, right? And then going into the low risk short, we created a breakaway gap and we created a fair value gap. The exact same thing in this case that we did right here, right? So as we come here, right, and price trades, we got here 940 on 3, traded into there, right? Then at 944, we traded up above that high one more time where we're stopping, right? Totally respecting the gap there, and we still respect the gap there, right? Respecting the low each time, okay? And then we sell off. So there's your opportunity short if you don't trust the low risk sell to participate, right? Anything further than this, you're just chasing price at that point. But it gave you ample opportunity to participate on the lower time frame based off of when the 15-minute interacted with that buy side liquidity. All right. So that's all I got, man. That's all I got. I just, y'all see for like the last however many days, we've been focusing on order flow and price delivery. Order flow and price delivery. Why? Because we sprinting now. We sprinting, right? We sprinting. This right here is what's supposed to be second nature. Order flow and price delivery is supposed to be second nature at this point, right? It's supposed to be second nature, right? Order flow and price delivery. So everything that we've been talking about over all this time, we've been covering this price action, right? At the end of the day, the most important thing is understanding the order flow and price delivery. Right? Right?
This was good to you.
Have y'all noticed I haven't been talking about consolidation?
Yeah, this was
expansion.
A good one here.
You know what I'm saying? Y'all notice I ain't been talking about this right here that much lately. I ain't been talking about that much lately. You know why? You know why? Because I noticed the more I talk about this right here, the more y'all be trying to look for it everywhere. Tim, is that consolidation expansion rate? Tim, is that consolidate? Don't look for everything everywhere. We're not looking for everything everywhere. We're looking for the overall arching theme of accumulation, manipulation, and distribution. That's what we're looking for. We're looking for this as an overall arching theme, right? Why? Because everything is based off the power of 3, right? But when we talk about the power of 3, you look for the power of 3 every second of the day. But the power of 3 is what everything is built on, right? If everything is built on the power of 3, that means that everything is built on accumulation, manipulation, and distribution. If everything is built on accumulation, manipulation, and distribution, that means that a market maker model is accumulation, manipulation, and distribution. That means that consolidation, expansion, reversal, retracement, delivery, that's all a part of accumulation, manipulation, and distribution, right? Consolidation, expansion, reversal, retracement, delivery, accumulation, manipulation, right? That's your manipulation there. You manipulated somebody. Accumulation, manipulation, and distribution. Right? If you get to the point where you're at accumulation, expansion, retracement, delivery, like that right there, at some point, what did you get? A manipulation. Right there. Accumulation, manipulation, and distribution. Well, Tim, what do you mean? We accumulated, right? We expanded, right? We came up and we manipulated out some type of buy side on some level, on some time frame. We could have been trading back into a fair value gap, but on some level, we manipulated some buy side. We tricked traders into thinking it was going back up, and then we distributed, right? Everything is built off the premise of accumulation, manipulation, and distribution, but we got to stop staring at the trees so we can see the whole forest. That's all I got, man. I'm tired of talking. Do anybody got anything for me? I don't know how many different ways I can say it.
Man, it's a master class.
Yeah.
Tim.
I don't know how many
But
different ways I could say it.
I
I
wish
appreciate.
you would have told us to start taking notes when you went to that what'd you say, the PDA matrix. Yeah, I wish you would have told us to start taking notes back then. Now I got to go back and rewatch it.
You know what Mama used to always tell when you sit in church, they tell you that make sure you got a pen and piece of paper because you're
Yeah.
just supposed to take notes. But
Yeah.
you're sitting there playing, getting pinched.
Yeah. Yeah. But you usually say from a note takers, you stop dropping hints.
Hey, but check it. I'm 52 years old, and when somebody in church asks me if I got a pen, I cringe because I ain't got there. I'd be like, oh no, I'm so sorry. I'm so sorry. No, I ain't got it. And they'd be looking at me like, clutch the pearls? You ain't got a pen? I mean, you asking me. I ain't gonna hold you. I be looking at ladies with purses so judgmental and they don't have no pen in their purse at church. Man, if you a lady at church, you better have 3 pens in your purse. Excuse me, can I borrow your pen? Oh yeah, hold on for. I want to hear the pens rattling. Hey man, what y'all got for me? Y'all ain't got nothing. If y'all ain't got,
it was wonderful.
it was wonderful. Okay.
I did get an aha moment during the session when you did the price. You did the Fibonacci or the price. You measured it from instead of including the breakaway gap. You measured at the the high right prior to it, and then did a measurement.
Mm-hmm.
It helped find an entry on a lower time frame. That was good.
Yeah. I'm glad you. Yeah. Round of applause for Deborah. Round of applause for Deborah. You always want to look for the inefficiencies, the fair value at the place that hasn't been presented fair value. You're looking for the inefficiencies, not just the imbalances. You're looking for where price has not been efficiently delivered, right? And so if you have a balanced price range, right, you don't want to see price going back there because that's indicative of high resistance, right? If it's low resistance, price should not want to go back there. Why? Because it's giving traders opportunities to pull their orders. They don't want to give them an opportunity to pull their orders. They want to just go and rip, right? Because if it spends too much time running back up like this right here, right? People that's offside down here, they're starting to pull their orders, right? So it don't want to spend a lot of time going. It just want to and go. You see what I'm saying? Because it don't want to give them time to pull orders. So you want to see that spooling. You want to see that low resistance. You want to see that go. And that's why you look for the inefficiencies, right? And you want to trust the idea that the algorithm said, I'm done with it. It's done, right? Because if price does this, then it should do that, right? It shouldn't do this. Okay, doing this is manipulation. But if price does
You showing your
this,
screen?
oh, I ain't going back through that. I ain't going back through that. Y'all should have said, Tim, you ain't sharing your screen. Y'all know I forgot I stopped sharing my screen. Right? Y'all know I forgot to stop sharing my screen. That's it. I don't see nothing in the chat. We done been on here for an hour and a half. I'm sorry for holding y'all long, but I've been drilling it home. Order flow and price delivery. Why should price engage? Why should the algorithm engage with this liquidity? Why should it engage with that liquidity? Why it is, if it's in a sale program? Who remember yesterday? Let me share my screen and then I'm going wrap it up here. Who remember yesterday when, who was that? Was that Lamar or Joe? Somebody said, hey, Tim, what do you think price is going to do? Something. And when I was trying to hit them with the crystal ball, they was like, or should you just wait for the algorithm to show you what it want to do? I was like, okay, you fixed it. Now, when we was talking yesterday, right, I said, and this is where price started here, right? Price has started trading here. And let's just say it's like we got off around 8 something. Let's just say price was here, right? I'm gonna go over to 9 o'clock. I know we went on there 9 o'clock, but I'm going to 9 o'clock, right? Let's just say that's what price was there. Okay. And then I said that price is in a sell program, right? So I would want to see price come up, manipulate out some kind of, because we was consolidating, come up, manipulate out some buy side, and then look for a reason to sell. And why? Because we're in a sell program, and I'm not trying to call a reversal on a sell program until we take out some liquidity or we trade into a higher time frame place that says I should be buying. And then we went up to the higher time frame, right? We went up on the higher time frame. First of all, we ran our Fibonacci's from the low to the high. I think I might have used the whole day, right? I might have used the whole day, so I'm gonna use the whole day. Right? I think I might have used the whole day, right? Because that's the range that I would typically look at anyway. And I said, okay, once I got below here, I'm in a discount, right? And then if we go up to like a daily time frame, if we go up to like a daily time frame and look, right? We said we had a bullish daily fair value gap below us, right? So if price got down inside this daily fair value gap, right? If we got down there, that's a higher time frame anticipatory reactionary point. So the higher time frame has a reason to come down there, right? It's got a reason to come down there. I'm not going to try to force the weekly low because I'm in a buy program, but since the lower time frame is in a sell program, I'm going to look for reasons to sell until I take out some liquidity that makes sense, or I get to a higher time frame anticipatory reactionary point. So there's our daily fair value gap that's marked out. That would be because that's the little line right there that we marked out. This little right there where the red dot is, that's what price was when we was talking about this, right? And then if we go to like a 60-minute chart, right? If we go to a 60-minute chart, we said that we got sell side liquidity here. We got sell side liquidity there, right? These are all like you can trade down, you can take something there, you can take something there, you can trade back to the whatever the fair value gap. So we was just looking at different things we could trade to, right? Saying we could trade down to like certain imbalances, right? Looking at the sell, like saying we got the sell side liquidity there, right? We can look at all the different we'll just talk about PD arrays that you can trade down to. But once we get below this right here, right, we're in a discount. So we want to start mining, you know what I'm saying? What we doing, we could trade back into the breaker. We could take something off and leave something for the lows. But we're just talking about the things you would shoot for. Why? Because you're in a sell program. Even though the higher time frame is in a buy program, you never try to call the bottom, right? Unless you have taken out some liquidity that makes sense, or you've come into a higher time frame anticipatory reactionary point. And when you come into that anticipatory reactionary point, you don't just call the bottom unless that anticipatory reactionary point is the opposite end of your market maker model. Right? Then you say, okay, we've completed this market maker model. Now I'm anticipating price to go back up. So then you look for the smart money reversal. You look for the low risk buy. And then when you move into that area of accumulation, you just look for reasons to buy until you reach the initial consolidation. Right? And then if we go in after we talked about looking for reasons to sell, because we were in a sell program and the algorithm had already didn't show a willingness to want to continue up. The sale program was intact. When we put the meat back on the bone, right? As we see, what did we do? We came all the way down below the sell side that we had pointed out, all the way down to the daily fair value gap that was below, right? Does that mean price is going to rocket back up? No. Does that mean price is going to keep tanking? No, right? We've come to a daily anticipatory reactionary point. So now we're looking for signatures that says price either want to go up or come down, right? And when we get it, and we already know, right? Whenever we're in a place like this, right? Remember, we are in a sell program here, right? We're in a sell program here, right? But this sell program, right, has reached a daily discount PDU rate, right? It's reached a daily discount PDU rate, and the higher time frame is bullish, right? So this is the time we have to be extremely careful trying to trade against the higher time frame narrative, right? We want price to really show you that this is what it wants to do in opposition to the higher time frame narrative, because now we've reached a place based off the higher time frame where this is a buy, right? So as we look at this dealing range here, right? As we look at this dealing range here, what do we notice about our latest bearish dealing range here, right? The first thing that we noticed is that we got very efficient delivery all up and through this area right here. So for our overall dealing range, this upper portion is efficiently delivered, right? So we're just focusing on the latest expansion of that dealing range, right? So focusing on the latest expansion of that dealing range, right? Where are we? We're right in the middle of the road, right? We're in the middle of the road now. Now that we're in the middle of the road for this bearish dealing range right here at a higher time frame anticipatory reactionary point, right? This is where you got to be careful. Why? Because now the algorithm at this point can be billing out a bullish dealing range to go back up, right? This right here could be the start of a bullish dealing range that's efficiently delivered in the lower half, right? If we just say, if we come up here and trade it above that high right there, okay? If we come up there and trade above that high, drop a fib there, and we just go above that high right there, right? Trade above that high, boom, we just swept that high, right? What does that say about this range right here? The lower half is efficiently delivered, right? And then that will be the time to be focusing on the area that left that dealing range, right? To look for opportunities to buy and go up. Why is that? Because now we got a bullish breaking market structure. This high took out that low and we came back above that high. Now we got a bullish breaking market structure. The lower half has been efficiently delivered. So now we're looking at this area as a reason to look for a reason to buy. Why is that? Because we've come to a discount PDU rate on the daily time frame and we're still respecting it, right? We're still respecting it. So on the higher time frame, right? On the higher time frame, if we go to a daily time frame, okay, get all this stuff out of the way. Get out of there. What in the world? Hide all that. I don't see nothing. Right. If we go to a daily time frame here, right, and blow this up like that right there, we go to a daily time frame, right? We've come up, created a bullish fair value gap, traded back down into the bullish fair value gap, right, and respected it. So right now on a daily time frame, the buy program is still intact, right? Buy program is still intact. Now we've traded below this last up close candle. So right now, right, we have a potential bearish order block right there. Okay, we got a potential bearish order block. Now on the lower time frames, right, we can use this bearish order block, right, to support sell programs that form until we confirm this bearish order block by creating an imbalance to the downside, right? Once we create an imbalance to the downside, then that would be confirmation of a bearish order block, right? Because we come up to a anticipated point of resistance, trading above an old high, right? And then we come back this way, trade down below that opening price and create an imbalance. Now that's the confirmation of that bearish order block, right? On the daily time frame. But on the lower time frames, if we anticipate price to stay heavy, we can utilize this if sell programs present themselves, right? Then we drop back down to a 5-minute time frame because I'm just dropping straight down from what's name, and see we are here. We're inside that bearish order block right there, right? So we can use this as a reason to sell, right? And this is coming back up into a premium of our sell program, right? But since we're trading off of a bullish fair value gap, right, we have to be careful about trying to just go heavy shorting because the higher time frame is still bullish, right? And now that you see, now that I've drawn out other PD arrays, what do we say when we're in between, right, opposing PD arrays? What do we say? We are where?
In between the tail of two cities.
In between the tail of two cities, right? Because this PD array job is to push price down. This PD array's job is to push price up. If it's not a clear indication of what price wants to do, that means that is not what? That means it's not what?
What you do supposed to be two letters? That was an H and a P?
Yes.
High probability trading conditions.
That means it's not high probability trading conditions when it's not clear cut. If you can form it algorithmically on both sides, right? You can say we are bearish. We have got a bearish breaking market structure and we are below a bearish order block on the daily. You can look at this and state it with a fact algorithmically, but you can also look at it and say we are in a buy program and we traded down into a bullish fair value gap on the daily. You can look at the chart and state it unequivocally, right? Boom, it's a true statement. So that means you got two very true algorithmic statements about the same price point. That means that is not high probability. That means it can go either way. And speaking of either way, where was price when we got our fib tool and ran it inside our latest dealing range? At 50%. What is 50%? Fair value. What is fair value? Equilibrium. What happens at equilibrium? Consolidation. If it's consolidating at equilibrium, that means price isn't bullish or bearish. It's right in the middle and it can go either way. That's all I got, man. I hope y'all took notes because I'm going to put this as a private video because I'm sick of y'all not understanding it. No.
Appreciate it, Tim. Hell of a session.
You're welcome, C-Walt. You're welcome, C-Walt. When I said I'm putting it on a private video, Deborah had kicked her teacup off the coffee table. Sharon was like, what in the world are you doing, girl? She was jumping up. She was jumping up trying to unmute the computer.
You funny.
Hey, man. Hey, man, I appreciate y'all for hanging out with me, man. I joke a lot. I try to keep it light. I try to make it fun because this stuff it takes a lot to understand it. It takes a lot to internalize this stuff right here. If it was easy, everybody would be doing it, right? If it was easy, everybody would be millionaires, but it's not. It's not easy, but it's not hard. We make it complicated because of our emotions. We make it complicated because we're trying to rush it. We make it complicated because we just don't want to take the time to really get it, like internalize it. We want it to just happen overnight, right? Because me, I'm a very competitive person. So I feel like if he can do it, I can do it. If she can do it, I can do it. And if I'm not getting it, ooh, that burns me up because I can't get it, right? It's like once I start doing something, I just gotta finish it. You know what I'm saying? But everybody ain't got that stick to itness in them, and people want to fall in their lap. People want to come easy. People don't want to work for it. You know what I'm saying? But you got to work for it. But I'm telling you, once you internalize it, once you start seeing it repeatedly, it starts to get scary. It starts to feel illegal. Like, man, I ain't supposed to know this. Is this illegal for me to know this? Right? I ain't supposed to be able to see this stuff like this right here, but it's there, hidden in plain sight. Somebody told me something a long time ago. He said, if you want to hide something from lump, what you said, them little Asian men that be dressed up in the black and got little black suits.
Yeah, the ninja. Tell them the joke about the ninja brain.
They said if you want to hide something from a ninja, put it in a book. That was somebody told me a long time ago. You feel me? Put it there. You go. Put it in a book. Is that for is hidden in plain sight? I ain't gonna tell them about the brain. That brain brand new.
Yeah, go tell them the brain joke.
I ain't gonna tell them about the brain. That brain, that's private family conversations. Hey man, look here. Hopefully y'all got something out of this. If you got something out of this, share this with somebody who's struggling on, you know what I'm saying? They trying to do this and they still struggling on it. You know what I'm saying? Share it with them. Anytime I make a video or I go live or I do something and you get something out of it, share it with somebody who you know struggling. You know what I'm saying? Let them know about it. All right. Because it's a lot of people out there. It's a lot of good people out there putting out information. It's a lot of grimy people out there putting out information. And it's a lot of people out there that's putting out information that's not really solid. You know what I'm saying? It's got like some holes missing here and there, leaving a whole bunch of, you know what I'm saying, room for destruction. Right. And I feel like over here we got a pretty good solid foundation of the understanding of these concepts. Right. Because if it wasn't right, I wouldn't be able to look at the charts, say the things I say, and then come back the next day or the next week and it be scarily almost to the tick sometimes of what we saying price should do before it even happens, right? Yesterday was another example. That's why I went back and said, we said it before we got out the live. Look, because it's in a sale program, right? You don't want to start trying to call the bottom of this until it does this, and it did this, right? Can't make this stuff up, man. This stuff works. About to get out of here. I appreciate y'all. Again, if this is your first time tuning in, welcome. Everybody else, y'all know what it is, man. Well, thank you for always tuning in to Tim's Tidbits. Until the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action, it's your boy, Timothy Lee Rogers Sr., a.k.a. Rania Grande. Sound kind of aggressive, but that just means big spider in Spanish. Hey, man, y'all be safe out here these trading streets. I'm gone.